All right, so today I wanted to do a video on Coca-Cola versus Pepsi. So I'll get right into the financials here on each one, then we'll dig a little deeper and we'll go from there. As far as the cash flow statement goes here, this is usually the first thing that I look at. Um, if we go down to the free cash flow again, Coke is growing. They're a very slow growth company, right? They're not a growth stock. They're not even growing fast for they're a value stock. And I'll get into more things later. But again, the cash flow is growing, right? I mean, if we look at the chart over time, it is growing. There was a dip, a pretty big dip in 2016, 2017, 2018, but it has been growing consistently since. 2022 numbers have not came out yet, but I would be shocked if they weren't up. So again, they are growing fairly nicely there. Um, as far as stocks goes, they have been issuing shares in 2020, 2021. I'd like to see what they did in 2022. I hope they weren't issuing shares. But if you go back, like 10 years, they were consistently buying back shares, right? In millions of shares, right? And then they bought back less in 2018, less in 2019. So I'm not sure why. And not only that, they took on some debt in 2021, which really makes no sense. I mean, obviously there was a reason for it. But again, for such a big company, it doesn't make sense to me. So that's something that's definitely a little bit concerning. If we get into the metrics here, they are a very, very profitable company. I mean, look at the free cash flow margin and 29%, 26%, 22% over the last few years. So very good. Not amazing, but pretty good. I mean, return on equity 42%, 40%, 46%, 37%. I mean, that's very good there. Free cash flow per share is also growing nice. Current ratio 1.13. Not great, but okay. If we get into the dividends here, I know they're growing at 3.5% per year. They are growing it year over year, every year, which is nice. Although the payout ratio is getting up there, right? It's 75%. It's just below 3% at the current price. So I wish they would grow it a little faster, but they can't grow it any faster because they don't have the money to do it. So if we get into Pepsi here, let's just get into Pepsi quick and see them. They are growing faster. Although their free cash flow payout ratio is higher, their actual payout ratio is lower, and their dividend is actually a little bit lower. So honestly, not that big of a difference here. Although Pepsi is growing theirs faster. Pepsi's free cash flow margin is not nearly as good, although it is a lot more consistent. I mean, the lowest it's ever gotten over the last 10 years is 8.8%. The highest it's gotten is 12.86. So very consistent there, although not great. It definitely should be a little bit higher than that. Return on equity is very strong. It's actually better than Coke's by the look of it. The free cash flow per share, honestly, not really growing all that well. I mean, it looks like it's pretty flat. I mean, the highest it's been was 2015, 2021 was a little bit lower. So not great there. If we get into the cash flow statement here, let's take a look at that. So again, Pepsi actually took on a lot of debt in 2020, it looks like. Yes, so they took on a lot of debt in 2020. That's probably pandemic related. Although they did issue some stock last year, although every other year they've been buying back, so I definitely prefer that. Let's just compare them directly here, compare the other numbers. So again, if we compare them directly, analysts are virtually the exact same on Coca-Cola versus Pepsi. Pepsi's dividend looks like it's a little bit better. As far as financial health goes, honestly, it looks like Coca-Cola is maybe a tiny bit better as far as current ratio goes, which is Simply, I mean, basically assets divided by liabilities, right? I mean, if they were to pay off everything, all their debt, would they be able to do it right now? Basically, I mean, let's just look at the exact definition of it here. Um, company's current ratio. Okay, so they don't actually do that. Let's go over here. Current ratios are popular. Current ratio above 1 means the company has more current assets than current liabilities. So yeah, I mean basically assets divided by liabilities, exactly what I thought it was. So yeah, that's that. As far as growth goes, Pepsi's definitely growing a little bit better because Coca-Cola's operating cash flow is going down, right? Revenue is going up, but their operating cash flow is going down. So that's another thing that's concerning about companies too, is that when their revenues are going up, but their operating cash flow and free cash flow is not, right? So that goes to show that there's definitely something wrong, but that's something you'd have to dig deeper to figure out exactly why that's happening. But that's never a good sign, at least in my opinion. Profitability, Coca-Cola is definitely better. I already went over that. Um, but neither one is terrible, to be honest. Pepsi's average. Coca-Cola is actually pretty decent. As far as returns go, they're the exact same. They both have a very strong return on equity, return on invested capital. So that's something that I'm happy with for both of them. As far as valuations go, both are expensive in my opinion. Although it looks like Pepsi's even more expensive. So this is another very important thing that I've brought up a lot before when you're buying stocks, is that you need to be very on the ball when it comes to this, because there's a lot of people out there. I mean, Tesla, probably the best example of this. Good company, but they're very expensive, right? So when you're looking at buying stocks, the first thing you want to figure out is it a good company, right? Are they growing, well? If they're paying a dividend, are they growing that dividend? Is the dividend stable? Are they profitable? Do they have a strong balance sheet? Like, those are the things that you want to look at first. And then once you find a company that checks those boxes, you need to also check what's the valuation on it, right? Because if you're paying for insane amounts of growth, it's probably not a good idea to buy the company, because yeah, it's a good company, but you're paying a massive premium for that growth, right? And Tesla is the prime example of this. But honestly, neither of these companies is great at the moment. So, and I'll show you exactly why, right? So average price to free cash flow over the last 10 years or 9 years for Coca-Cola is 27.08. Pepsi, it's 26.29. So it's almost exactly the same, right? But if you look at their current one, Coca-Cola is actually a little bit below at 26.17. Pepsi's at 36, right? So Pepsi is trading at a pretty large premium to what it normally trades at. If you look at the risk premium, that's simply the yield compared to the 10-year treasury, right? This is something that Warren Buffett always looks at. In my opinion, it depends on the kind of market you're in. If you're in a low interest rates, QE environment, this doesn't matter. But if you're in a high interest rate environment, this is something you definitely want to keep an eye on, because when you look at institutional investors and they're trying to decide, should I park my money in bonds or should I park my money in stocks? Something they're going to look at is, okay, well, what do I project to get as far as returns go on this stock, and what would I project to get on a bond? The higher the rate you can get on a bond, the more likely they are to invest in bonds, because, well, bonds are a guaranteed return, right? Stocks are not. So again, when you're investing in stocks, you need to know that it's significantly more likely that you're going to get a higher return, right? So that's why raising interest or higher rate environments are harder on typically growth stocks, right? Because growth stocks are stocks that trade at a premium because they project growth in the future. But when you have higher rates, you need to discount more, which means that they're less attractive, right? Now, Coca-Cola and Pepsi are not growth stocks, right? They're both value stocks, right? I mean, if we look at the PE, I'm not a big fan of PE. Let's find PE just for curiosity, because there's a lot of people that use it as well. So again, if we look at PE, average for Coca-Cola is 36. Pepsi, it's 24. So Coca or Pepsi actually looks better as far as that metric goes, or at least over the long run. But again, what does this number show me? This is the point I was trying to get. What does this chart show you? Is neither of these companies, honestly, in my opinion, are a buy at what their current prices are, right? Honestly, I don't know if I would pay, to me, even a 25 price to free cash flow is probably still a little bit expensive for both of these companies. So if I'm getting right into it, right? I mean, let's say I would pay like a 22, right? Let's say I would pay a 22 price to free cash flow, and let's do it based off its current prices. Pepsi, honestly, I wouldn't pick it up until, or sorry, Coca-Cola, I wouldn't pick it up until it was about $51, $52 a share. Obviously, honestly, this is just all in my opinion. Do your own due diligence, but I wouldn't pick it up until it was in the low 50s. It's currently around 60. If we look at Pepsi, Pepsi's at a lot higher of a premium right now. But so Pepsi's going to have to come down more for me to be interested in it. So again, if we look at the low price to free cash flow, the lowest Coca-Cola's got is 19.2 over the last 9 years. So again, it's unlikely it's going to go below that. If I could get Pepsi for a Coca-Cola for a 20 price to free cash flow, I would be pretty happy. Pepsi's got to as low as 16.8. Let's just go to the last 5 years, just out of curiosity, to see where they were at, and maybe let's do 4 years. So if we look at the low price of free cash flow for Pepsi is 22.3, Coca-Cola 19.3, so almost the same for Coca-Cola. So let's say we would be comfortable picking up Pepsi at a 23 or even a 22 just to keep it the same, because I mean they're growing. Coca-Cola is actually growing a little bit faster, so you definitely shouldn't be paying more for Pepsi. So let's say you want to pick up Pepsi for the same. Latest price for free cash flow is 36. So based on its current amount of free cash flow, you wouldn't want to pick up Pepsi until it was like in the low hundreds, right? Like between like 100, 110, right? It's currently at about 170. So in my opinion, the better buy right now is clearly Coca-Cola. Although Pepsi, I think, is a little bit more diversified, which is probably why people are paying more of a premium for it right now. But like I said, I don't think either of them is a buy based on current prices. I think they're both too expensive. But like I say, that's my opinion. Do your own due diligence. If you like the video, hit that like and subscribe, and stay tuned for more.